Hello everyone and welcome to POV, your favorite web political commentary series where we're going to ask today the very important question, was the MPS worth it or nah? Let's get it. Well, we asked for it and we got it. Early last week, the Reserve Bank governor took to his podium and announced the highly anticipated RBZ monetary policy. The policy has sparked widespread debate amongst the economic savvy, while us simple citizens just want to know, is the world burning or nah? The truth is the jury is still out on this one, with there being an even split on either side of the policy. Some say it's a step in the right direction, or the continuation of the poor and misguided economics this RBZ has been known for. And the reason why there are clearly two sides is because this monetary policy has clear winners and clear losers. And depending on who you're talking to, they either have good policies or this resembles Liverpool's chances of winning the Premiership. It's a complete and utter joke. So let's start our analysis by looking at the heart and soul of the policy. The introduction of the RTGS dollar, the new 1.25 rate, and the newly formed interbank foreign exchange market. Now, the Reserve Bank introduced a currency, not currency, called the RTGS dollar. The RTGS dollar is money made up of bond notes, bond coins, EcoCash, One Money, Telecash, and RTGS balances. Effectively, today, all the money in your regular everyday account is now RTGS dollars. So when your friend asks you to send them $20, you're not sending them $20, you're sending them 20 RTGS dollars. However, if you had money in an FCA account, that still remains US dollars. So the real life implication of this is where we begin to see the emergence of winners and losers. It's sad to say that if you're a person who was faithfully storing away US dollars in your account, effective today, those US dollars are no more, and they are now RTGS dollars. The bank has instantly devalued the money in your account by 60%, which is criminal to say the least. On the other hand, if you had borrowed real US dollars and not paid them back before the policy statement, you now owe 60% less, which begs the question, who really had access to borrow money at 1:1 in the first place? So in the line of winners and losers, if you're a local lender of money, tough luck, because the money you are owed has been shaved by 60%. And this may sound like a joke, but essentially, if you kept your forex under your mattress and not in the bank, you're a winner. And if you put it in the bank, I believe the expression is dololo. And remember, FCAs were introduced less than 5 months ago, so all the money you couldn't yet put into the FCAs is gone. The aspect of this policy has rewarded those who borrowed for short-term consumption spending and has punished those who save for long-term investment in productive assets. And that is madness, to say the least. Imagine that, if you actually dared to trust the system versus someone who was seemingly foolish and put things under their bed, who is the crazy one there? Now let's look at 1:2.5. The acknowledgement of the adjusted rate means that the RBZ has finally accepted that their fantasy 1:1 rate was unrealistic. And this move has made a lot of credible experts excited, as this shows that the RBZ may now be ready to engage in real economics. Now, why this took so long, Lord knows, but we're just happy that we're here for now. So what this means is that your local restaurant, supermarket, and regular retailer now has a steady rate to price their goods, which by all means is a win for them. And in addition to this, there's been an establishment of an interbank foreign exchange market, which have been introduced for sellers to go and purchase foreign currency to replenish their stocks at a steady rate outside of the black market. Now, this means that the banks and bureau de changes are also potential winners, as they may experience a massive influx of foreign currency. So it's a win for the banks and happy days for the sellers, who may potentially have a way around the black market. But for us on fixed incomes, well, it's business as usual, because for pensioners or regular workers, your income is still going to remain fixed. And everything around you, the commodities, the stuff that you buy in the stores every day, is still going to be adjusted at a price that is outside of your income, which is what we've been doing every day anyway. But the only thing that is different is that the government has officially recognized that this was happening and has tried to intervene by giving sellers a rate that is closer to the reality of things. But you and I were still at a loss. But, and this is a big but, and I cannot lie, here's where the plot thickens. because we cannot produce much in this country, most sellers still need to import or restock their goods with US dollars. The US dollars they can now acquire from the banks or bureau de changes. But where are the banks and bureau de changes supposed to get these US dollars? The RBZ don't have the reserves to kickstart this, so they're going to rely on you and me to feed the system. The same people who just had their precious savings squandered whole are now meant to continue to feed the system in order for the market to thrive. Once again, the government has gone out on a wild bender and has just left us to settle the bill. But don't worry, guys, next time they swear they've got it. And if the banks and the bureau de changes cannot successfully supply the sellers, guess where they're going to have to go to get their US dollars? That's right, black market Bob. And if they have to go back into the black market and the cost of acquiring the US is high, the prices will shoot up and we are still losers. Now here's one more for good measure. Let's say you are faithfully paying your insurance premiums on time and in US or RTGS. Did you know that insurance companies can discharge their obligations to pay out your claims because at the new rate, you're underinsured? So the winners are the pension funds, insurance companies, and employers whose liabilities have been reduced by the losers, who are the pensioners, employees, and the previously insured. You see, there are many of these winners and losers scenarios that we could have covered, but we actually invite you to tweet at us and comment below using the hashtag MPS winners and losers. And you can tell us and join in the conversation of who's a winner and a loser and why. And the importance is we want to be able to create a dialogue which we can all then help each other to understand the reality of what this MPS means for you and me. So let's do that. So as you can see, the difficulty of understanding, trusting, and analyzing this policy is that it still heavily relies on one's ability to trust the credibility and trustworthiness of the issuer. If you can see the bigger picture and ignore the painful shortcomings, you can take away many positives from this policy as it does truly have steps moving in the right direction. But if you cannot bring yourself to trust the issuer and can see the gross injustices and blatant repeat of bad practices, then this policy offers nothing for you. Now, we all know that there's still many aspects of the policies we didn't touch on, such as the 30-day use it or lose it. But we have something lined up for those, so stay tuned with us. But what we wanted to achieve through this episode was to try and give you, the viewers, a basis for making your own conclusion on how to feel about the MPS. However, like the most new policies in this country, we still only are able to really understand it by experiencing it. So there's still much more to talk about it, but as we go through it on a day-to-day basis, we might be able to pull out what it really means for us. Now, I know my conclusive statements already sounded like my POV, and for the most part, perhaps they were. So the only thing I'm going to add is that the challenge that we have with this MPS is that it was supposed to address the challenge of Forex and the trustworthiness of financial institutions, including the RBZ themselves. But this MPS has attempted to create a solution for the Forex matter that requires us having trust in the banks themselves. It doesn't work if we already don't have trust in the bigger picture, if we don't have trust in the consistency of your policies, if we don't have trust in the very people who are asking us to continue to invest in a system that has done nothing but let us down. Perhaps maybe if we began to prioritize those issues of building trust, MPSs wouldn't be so divisive as they may seem to be. This is Kuda Mangwe saying good morning, good afternoon, and good night.